Hello, everybody. Today is July the 17th, and it is good old oil trade again today, CL up here. Now, I wanted to talk about this trade because I entered it twice, and this is the power of risk management, order flow, and market profile. So, pre-market, we had a big push up, and if you can see down here, I don't talk about this much, but this is expected volume, and the yellow line is where volume typically is, and anything above that means there is excess volume above the expectation of that line. So we had a lot of pressure coming in here, and this happened at 7:30, and I was watching order flow. I'm like, oh my goodness. But because I only trade market profile in these particular scenarios, I have a couple other strategies, but this is a market profile trade, so I typically like to follow the rules almost to a T when it comes to this. So pre-market, we had a lot of up pressure, and then right here at our market open, we was pushing down. Now, my first trade, I jumped in on this candle here at 52.09. So about right there. I jumped in on a long order, two future oil contracts. But market profile rules state 2 consecutive candles have to be closed inside a value area. And if you can see, this was only one that is closed. Now, I considered it 2 because this closed right on the line. So, and then I was watching order flow again. So this was actually a high probability trade to me. But as you can see, next candle, it broke back below the value area. Now I had a 10 tick stop loss set at 51.99, which is right. It's right in there. It's right there. It is on this candle, on this red candle right here, and it got stopped out. So no big deal. The order or the charts, they were just lingering right here. So I didn't know if it was gonna break above. So I was just watching it, but yeah, I figured something was going to happen. Just kind of watching it in this particular area, and sure enough, right here, this big green candle is called a bullish engulfing candle, and it's broke right on through there. And what I did was went back to market profile rules, and I waited till this candle right here closed, and I jumped in long 2 oil contracts at 52.37, right there on that this green line right here. So caught a little bit of heat, no big deal. I had my stop set just below value area again at 51.99. I never did reach down there. Lingered in this area for a long time, and then we got a big push from order flow, shot it on up, and this is where I took profit at 52.77. Right there, it's like half a tick. I think when the market was open, it was actually on this green line, so it was 52.77. So that's plus 40 ticks for this particular trade here on 2 oil contracts. Oil moves at $10 a tick. So first trade was negative 10 ticks, and second trade was a plus 40 ticks for a net profit of plus 30 on this particular trade here for market profile. So that's how this one went. They had a divergence way early in the overnight session, but it didn't really come much into play at that particular move right there. You see, it just kind of channeled, and then there was a big push up at 7:30 in the morning. So, and I'm still just kind of dissecting charts about that particular time in the morning. and taking my dog out. So I'm not really actively looking at the market around then. But if something really catches my attention while I'm analyzing, then I'll jump on it. But about 8:30 or so is when I start looking to actively get into the market. Sometimes it's earlier. Most of the time it's right there at market open. That's my ideal spot. So that was oil today. It was a successful trade using risk management, cutting my losses quickly and letting my profits run. And this is textbook, almost textbook market profile. 80% rule in effect, came up, reached. So I have no idea where it closed at. My chart's actually shut down now. This is late in the evening while I'm recording this. And net profit was plus 30 on 2 oil contracts. So overall, I think it was a pretty successful day, and I will see you guys tomorrow. Later.